as I mentioned you before, that in your assignment 2, you have two learning outcomes, learning outcome 3 and 4, and learning outcome 3, you have one task, and learning outcome 4, you also have one task, right? So learning outcome 3 and 4, both you have a calculations part. So hopefully next week we will finish learning outcome 3, and then week later, hopefully, it depends upon the assignments. So if we finish next to next week, and then we will decide submission deadline, same like as assignment 1. So once you finish all the topics, so maybe I'll give you maximum 10 days or like 2 weeks to submit your assignment. So that's why if you finish learning outcome 3, which is next week, you keep working on your assignments. Don't wait for announcing the submission deadline. So submission deadline will be um, maximum 2 weeks after you finish all the topics. All right. So it's more likely to be in the first week of May. All right. So it's first week of May. Hopefully, if it's not, maximum will be middle of May. You have to submit your assignments. All right. So now let's start with the continue with the previous session that we discussed about bank reconciliation statement. Um, so we have uh, learning outcome 3, which is bank reconciliation statement. All right. So in previous session, we discussed about what is bank reconciliation statement, right? Why we prepare bank reconciliation statement. Of course, in order to make balance between passbook and cash book, all right? We prepare bank reconciliation statement. So quickly, a quick view on the passbook and the cash book. Passbook is a book that prepared by a bank, right? Which is prepared by bank. Sometimes we call it bank statement, all right? And cash book is the book which is prepared by company. Sometimes we call it cash accounts, same thing, all right? So which is prepared by company, all right? Okay. And in the previous session, we also looked at why we have to prepare bank reconciliation statement. The reason is that sometimes the balance between passbook and cash book, right? Passbook and cash book is not equal, all right? So in order to find the difference between passbook and cash book balance, we prepare bank reconciliation statement, all right? Now, what are the reasons that we also discussed in the previous sessions? What are the reasons that that's create a difference between passbook and the cash book, all right? So reasons, all right? So we have two reasons. One is the time difference, all right? And second one is the errors made by either bank or company or both, all right? Both making any kinds of error. So that's the thing that we cover in the previous session. And We also learned about what are the examples of time difference, right? We also discussed about what are the cases related to time difference. So I think I remember we discussed about six, right? 6 or 7.
Six picture.
Six, right? So we studied about six differences that's create an imbalance between the balance of passbook and the cash book, right? And of course, we have two cases here, right? Two cases means one by company. If company make any errors, then balance will not be equal, or bank making any mistakes, balance will not be equal. Anybody, either company or bank, is making any mistakes. So that's all about the previous sessions, right? So now let's move on to our um, next uh, outcomes. Uh, so next is, in this session, I will explain you first. So in this session, so it's 2 days sessions. All right, 2 days session. In today's session, uh, we will discuss about the first thing we will discuss. Uh, few things we have to keep in our minds, or few balances we need to know, or few items we need to know before preparing bank reconciliation statement. All right. So so let's start with uh, before preparing before preparing bank reconciliation statement. So what we need to do before bank reconciliation statement, we need to find the balances, whatever balances are given in the question. So there are 4 types of balances that may be given in your question. So we have to use those balances, start preparing your bank reconciliation statement, right? Uh, so these balances. So we have 4 types of these balances, right? The first one is a debit balance as per debit balance as per cash book, right? Second one is a credit balance as per passbook, right? Third one is a credit balance as per cash book, right? And the fourth one is a debit balance as per passbook. So you have a 4 kinds of balances are given. Not all, one of these, right? One of these balance will be given. So what these balances means, so we have to understand, right? What these balances means. So keep in your mind the information I provided you in the previous session. Like as in the previous session, I explained you that uh, if cash account debit, which means money in. But if bank accounts debit, which means money out. All right. So cash account debit means bank accounts credit from bank point of view. If bank point of view, credit balance means you have money in your bank accounts or money in your bank accounts. All right. So this is the information I already provided you in the last session. So make sure you remember that. Okay. Now, debit balance as per cash book, which means we have money. So plus or positive balance. Credit balance as per passbook, which also means positive, right? Means we have money in our bank accounts. Credit balance as per cash book, which means if cash accounts credit, which means money out, which means negative balance, right? And debit balance as per passbook also means negative balance, right? So the idea is these means positive balance, all right, which it means positive balance, and it means a negative balance, all right. So keep in your mind this thing: positive balance, which means these two things, and negative balance means these two things, all right. You have to get, you have to understand this information given in your question. So of course, as I said, all these four balances will not be given in your question. One of these, right? Maybe in some question debit balance as per cash book, maybe in some question credit balance as per cash book. So make sure you read it carefully, all right? Okay, so that's the ideas behind before preparing bank reconciliation statement, right? Now, how to prepare, how to prepare bank reconciliation statement, all right? How we prepare. So in order to understand how we prepare, we need to know about the format of bank reconciliation statement. So through these formats, it's formats like as your trial balance, all right? But interpretations of these bank reconciliation formats is different than your uh, trial balance, right? Okay, so how bank reconciliation statement looks alike. So as I said, it's like as your uh, trial balance, right? So that's your transaction number, and that's your transactions, and that's your accounts balances, right? So the title of bank reconciliation statement will be bank reconciliation statement of, this is the name of company, name of customer or name of company, whatever company is given, all right? Not name of bank. So BRS of name of customers, and bank reconciliation statement of, let's say, ABC on, and here is the date, right? Here is the date, right? And here is the name of company, name of entities, right? So bank reconciliation statement of ABC on maybe 31st December 2018. right? So that's the title of bank reconciliation statement. So the name and dates are given in your assignment scenario when you will see it, when you will get it, so you can see that, right? So here is the first column, right? So this is your transaction number. Is it transaction 1, 2, 3, 4, whatever, right? So all the transaction 1, 2, 3, 4, right? For example. And here is the transactions. What is the exact transaction? For example, um, check directly deposited in bank. So check directly deposited in bank is your transaction. So that's you will write down here, right? And here is the plus. If any item, you will add it. And here minus. Any item, you will subtract it. So how we understand, we have to write in this column or this column, right? This thing I will explain you in the next information, right? So next information you will understand which item you will write down in plus columns, which item you will write down in negative columns. So there is no any debit and credit, just plus amounts and the negative amounts column, right? Okay, now let's start with transaction 1. So transaction 1 always comes from these 4 balances, either this, or this. All right, as I said that. These are the balances. So we need this balances, as I said that. Find a balance. So find a balance means in your question, you will check whether balance as per, debit balance as per cash book or all these things, all right? For example, uh, credit balance as per cash book, all right? So you will write down here, credit balance as per cash book, all right? And you will write down amounts in this column, right? Here, not here, because it's a negative balance. So you will write down in this column, right? So this is the first transaction all the time, right? Now, transaction 2, 3, 4 could be any transaction as per uh, as per this information, right? As per this information, any transactions could be 2, 3, 4, right? So that's we will come later on these points. So from this 6 information, let's say we have a 3, could be plus or could be minus. Either plus or minus. It can be both at the same time. One transaction cannot give both impacts. That transaction can give either positive impacts on BRS or negative impacts, but it can't give both impacts, right? Okay, so let's say we done it all the transactions, right? After doing transaction, now we're gonna check the balance of these sides and these sides. And balance will not always equal, all right? Is not always equal. That's why there is a difference between these accounts, cash book and the passbook. In order to find how much is the difference, we prepare bank reconciliation statement. So the balance between these two accounts may not be equal. So let's say this sides is $100, right? So let's say $100. So for example, 50, 50. So this sides is $100. Okay. This sides, let's say here, I don't know, let's say um, 40. So let's say we have 3 transactions, 1, 2, and 3. Okay. So this side 40. All right. So how much is difference? 60. Right. So let me, so I make it a little bit bigger so we can understand. So here we're gonna check. So let's say this one is 100, all right? And here is 40. So what does it mean? Difference is a 60, right? So this is difference. So we call it this 60, we got this 60, we also call it balancing figure. Balancing figure. Balancing figure means any kinds of number which is the difference between two columns, right? So of course, this 60 is the difference between this number, this column amounts and this column amount. So we also call it balancing figure. So this balancing figure is your answer, all right? That is your answer, not this, right? So that balancing figure will be your answer. This balancing figure, of course, depends your negative columns and the positive columns. So the difference between negative and positive columns will be your answer. Now, what we call this number, what does it mean? So this number means we call, if let's say here, this is balance, it's a credit balance as per cash book, right? So this is credit balance as per cash book. If this is balance as per cash book, which means this is balance as per passbook. So this is your passbook balance. If this is cash book, if the first balance is the cash book, the last will be passbook. If this is passbook, then this will be cash book. All right. So that's that is your bank reconciliation statement. So your bank reconciliation statement should looks like this, right? And that's the interpretations to understand bank reconciliation statement. So that's number, I need this number, right? So I need this number. This number is your answer, right? As I said, this number is your answer. So with the help of this number, we can understand that's the actual balance of the passbook. So that's the meaning of balance as per passbook. So this is the amount is available in bank accounts. So we will be able to understand that amount is available in bank accounts. So we know that how much money we have in bank accounts, all right? Not the money we have here. Because if now the question is why we have to prepare bank reconciliation statement. Again, I said that the balance may not be equal. So that's why we won't be able to make a right decision. So we need to know what is the balance of the of the um, passbook, right? So transaction may not be equal, right? So in order to make the transaction equal in these both accounts, we prepare bank reconciliation statement. With the help of this statement, we find out whether how much money is available in bank accounts, and that money is right or this money is wrong, right? So the money we have in our cash book, right? So that's the formats of preparing bank reconciliation statement, right? Now we move on to the next. Next is methods. Methods of bank reconciliation statement. How many methods we have to prepare bank reconciliation statement, or how many methods we have to deal with the situation of imbalances between cash book and the passbook amounts. All right, so we have two methods. So we have two methods. One method is without cash book adjustments. Without cash book adjustments. And first method and second method. And second one is prepare BRS with cash book adjustments. Right? So we have two methods of preparing bank reconciliation statement. Now, what is the difference between these two methods? As you can see the name. In first method, we will not make changes in our cash book. We will not make any changes in our cash book. At the end of the year, we prepare bank reconciliation statement, like as we did it here, all right? With the help of this bank reconciliation statement, we will find out the balance difference between cash book and passbook. So which means with the help of these methods, like as this one, right? Without means this method, right? This is without, exactly this BRS means without, right? So by looking at bank reconciliation statement, we will find the balance difference, which is, let's say in this question, it's a $60, right? Now, second method. Now, what we do in second method. In second method, we do not prepare bank reconciliation statement following this formats, all right? We don't do that, right? What we do, we only make changes in. Okay, so we continue. So as I said that we have two options here, methods or options to prepare bank reconciliation statement. In first method, as I said, we simply prepare bank reconciliation statement, right? That's we did it previously, right? And in second option, we will not prepare bank reconciliation statement. Instead of preparing bank reconciliation statement, we will make changes in our cash accounts, right? And by making changes in our cash accounts, obviously, in order to make balance between passbook and cash book, we have to make changes, all right? Option one is we don't make any change. We prepare simply BRS. And second option is we make changes either in bank accounts, the bank statement, which is controlled by bank, or we make changes in cash book, which is controlled by company. And you know that we are the company. We do not have any access to make changes in our bank statement. This is completely controlled by bank. So that's why here we gonna make changes in our cash book, all right? In our cash book. So we change here. After making changes, obviously the balance between cash book and passbook uh, will be same, right? Or, or we find whether how much money is available in our bank accounts by looking at cash book. All right. So this is called with. All right. We start with without, and at the end of this topic, we will move on to with. It's not so complicated, all right? Because once once you understand how to prepare bank reconciliation statement, which is without cash book adjustment, uh, second method is much more easier for you to do that, right? So let's start with the preparing bank reconciliation statement, right? So now, as I explained you before, that let me draw your bank reconciliation statement to explain you. So previously, that's bank reconciliation statement we have. This is number here, 1, 2, 3, so on, right? And this is positive column and negative column, and this is the transactions we have, right? And that's number, transaction number, right? So now I'm gonna tell you how to find information which could be written or could be declared in this column or this column. How can we find this information, right? So in order to find this information, we have to go back to the uh, previous session. In the previous session, I gave you example. The example was explain us the difference between cash book and passbook, right? So difference is due to time difference and the difference due to the error. So now we gonna fix those situations or reasons which could create imbalance between passbook and cash book. All right, I repeat, we gonna fix those reasons that could create a difference between the balance of cash book and passbook. All right, so let's start with those reasons. So we will go step by step, right? So it's the same reason. So let me write down here. It's a reasons. All right. So reasons means mainly time difference. All right. Time difference. So the first was check issued but not presented for payments. Check issued but not presented. If check issued, not presented, all right? So let me write down here, cash book and passbook. So check issued but not present. What we did when this thing happened, when check issue means we are writing a check. Check issue means we're gonna make a payment. So what we did, we subtract from cash book, right? But due to time difference, at the same time, my money will not be debited from bank accounts. So which means no any changes here. So balance unequal, right? That's the reason, right? Now how to fix it? So, so this is the example of imbalance, all right? Imbalance. And here is how to fix these mistakes. So in order to fix this mistake, what I have to do? Can I make changes in passbook? Of course not. Passbook remain unchanged. So in order to make balance equal, I will plus in my cash book, or I will plus in my cash book, or I will write down in plus column here. I will write down in this column. Right? That's the impact of the first. So I'm writing plus. Plus means you write amounts in plus columns, right? So that's the first situations, right? Now move on to the second situation. Second was check paid but not collected by bank, right? So check paid but not collected, all right? Not collected. Same thing we have to write down. We have cash book, we have passbook, right? Which means someone give us a check, but bank did not collect right now. Someone give us check, we get the check. Once we get the check, what we think? We think money already in my accounts. So which means I will make changes in my cash book. So which means I increase my cash book, all right? But of course, as I explained you in the previous session, you got the check right now. It doesn't mean that money comes in your bank accounts right now. It doesn't mean that, right? It takes time to credit your bank accounts. It takes time to money in your bank accounts. So which means once I receive a check, my point of view, cash increase, but bank point of view, cash increase, no, nothing happened in the bank, right? Reason is balance unequal, right? So how to fix these mistakes, right? I will minus from here, of course, or I will write down in minus column, right? That's the treatment for second transactions, right? So let's move on to number 3. If anything is unclear to you, please stop me, so I will explain you that points, right? Next is direct debit made by bank, right? Direct debit made by bank, right? So we have cash book, we have passbook, right? Direct debit made by bank, so means money out from my bank accounts, right? Which means money out directly from bank accounts. So which means I do not have any information. There is no any changes in my cash accounts, all right? Balance, imbalance. How we can fix it? Can we make changes in our passbook? Can we make changes in our bank accounts? Answer is no, we cannot. But of course, we can make changes here. So what changes will be here? It will be minus. So minus, minus, balance, equal, right? Means you will write down in the minus column, which is here, whatever the amounts, $100, $200, whatever amounts, right? Now, number 4 is amounts directly deposited in bank. Amounts directly deposited in bank. So means my bank account directly credited, right? As you know that bank accounts credited. So cash book and passbook. Amount directly deposited in bank, which means my bank balance, my bank accounts balance will increase, all right? But it's a direct, like as here. It's a direct transfer. So I did not have any information about it. So no any changes here. Balance unequal, right? So how to fix these mistakes? I will plus, of course, plus my cash book because I cannot touch bank statement or bank accounts. I cannot make changes in bank accounts. Or in my plus column, which is bank reconciliation statement here, in plus column, I will write down here, right? Plus column, right? So that's is your transaction 4. Okay, now move on to number 5. Number 5 is interest or dividend collected by bank. Interest or dividend are collected by bank, right? So means it's already credited in the bank accounts, right? So here is the cash book and we have passbook, right? So if interest directly collected by bank, which means my bank accounts increase, but it's of course directly not, we do not receive interest or dividend in form of cash or in form of check. More likely money, maybe check, but more likely money directly transfer in the bank accounts. All right, so I have less information that when bank receive interest. All right, so if I have a mobile banking, of course I can get a text message, but normally uh, if I don't have that kind of system, so which means I will understand nothing change in my bank, nothing change in my cash accounts. As a result, balance imbalance, right? So in order to fix this balance, I will plus, of course, plus here, right? So that's your number 5. Now number 6, direct payments made by bank. Direct payments made by bank, right? Cash book and passbook. So payment directly made by bank. So directly my bank accounts debited, which means I have no information about cash accounts. All right. So money out, I have no information about it because it directly impacts without getting any information. So that's balance unequal. So how we can fix it? We will minus. All right. So this is number 6. Now number 7, I guess 7, 6 or 7. I think I missed something from the last in the last session, but 6 or 7 is maximum 7. Right? This is the check dishonor or check bounced. Bounce is an informal language, and dishonor. check dishonor. So we have cash book, we have passbook, passbook, right? Now, check bounced. I made a payments, right? What happened here? I'm writing a check to someone. Means I need to pay money to someone. So when I'm writing a check, means I'm minus here, right? But check was bounced. Check was bounced means I'm writing a check which value is $5,000, all right? Because I need to give you $5,000. But when I give you a check and you go to your bank and your bank contact my bank and your bank came to know that my bank, in my bank, I don't have enough money. As a result, check is bounced. So it means no any movement occur in my bank accounts. Means no any money out from my bank accounts, right? No any changes here. As a result, balance is equal, unequal, right? So how we can fix it? So here we will plus, all right? We will plus, of course, in our cash book. If you plus it, problem solved. Right? So that's the ideas behind this seven seven kinds of this seven reasons. So this is the treatment, right? Now I'm gonna show you how you can, if you are using without method, without cash book adjustment method, or if you are using with adjustment method, right? Of course, nothing changes here, no matter you are choosing with method or without method, right? Nothing changes here. These signs will not be affected, no matter what method you are using. Okay, if you are using without making changes in adjustment, so you will prepare simply bank reconciliation statement, like as here. You prepare, this is without, right? This is without method. You simply preparing bank reconciliation statement of ABC on 31st of December 2018, right? So all the plus minus changes you write down, and at the end you will find the balance, whether it's positive sides or negative sides. If your opening balance is the cash book, your bottom balance will be passbook. You know that we did it before. Now, what if you follow cash adjustment method, right? With adjustment, in cash book or cash accounts, all right? Cash book. How you gonna disclose this information? You're gonna disclose this information exactly like as you prepare cash accounts, all right? Exactly, right? So let me show you how we prepare cash accounts. Now here, remember, this is the impacts. Fix it. Fix it mean this give impacts. This give impacts on cash accounts, all right? Cash book. These impacts on the cash book. So now cash book plus, all right? Cash book plus debit, credit, all right? Now, debit means cash book plus, credit means minus. So plus, you write down here, this number, you write down here. All the plus numbers you write here, all the minus number you write down here, and of course you're gonna find out balance, positive sides has a more balance or negative side has a more balance. As you learn from your ledger accounts that if debit side balance is higher than the credit side, which means cash account has a debit balance. All right. If credit balance is more than debit sides, credit side is more than debit side, so which means we have a credit balance. You can have either, your answer could be this or this. All right. So debit cash balance. Now, what does it mean? Debit balance. Debit balance of cash accounts means credit balance of passbook. So which means in my passbook, I have this money. Exactly this number, we can get it from without adjustment. So this number will be equals to this number. All right. If your cash accounts balance is a credit balance, so which means your passbook, you have a debit balance of passbook. That's the meaning of this one. That's the meaning of this. So this is the with adjustment in cash book. So again, no matter you follow without adjustment or with adjustment, of course, your answer will be same, because we have two different methods, no matter we apply with or without method, right? Now the question is, which methods you more likely to apply in your assignment? So you have to wait for the assignments, right? But of course, I will give you some homework, some practice questions, so you can do those questions in order to understand how we prepare a bank reconciliation statement. All right. So let me show you the question, and with the help of that question, you will understand how we actually prepare a bank reconciliation statement using without method. I'll show you without method first, because without method is much more easier compared to cash book. Of course, cash book is also easier, but if you know how to prepare ledger, and I believe you all know how to prepare a ledger, right? Cash book, cash accounts, right? So before we move on to the question more likely to see in your assignment, the same question. Do you have any question before we move on to the exercise? Anybody has any question?
I think no.
No question, okay. So we move on to the practice question. So one more thing maybe I missed, the information that you have to, that may be given in your question is an overdraft. All right. So if your question says overdraft in bank account, passbook or cash book, so always remember overdraft means negative balance. Let me write down here. So I write down here, maybe here, overdraft. All right. Overdraft means negative balance. Negative balance. negative balance maybe for passbook or cash book. It's always written, so overdraft balance is always written in your negative column sides, right? It never written here, right? Because it means positive impacts on the cash. It's a negative impacts on the cash. So bank overdraft means a negative balance. So if your question saying that uh, overdraft balance as per cash book or overdraft balance as per passbook, you will always write in your negative column, right? So remember this thing, right? This is important. Okay, so here um, we have a question. So we have three information. I guess it's four, not three. Uh, it's three. It's not three actually. It's a four. It's a fourth transaction is here, right? So we have four information, but we don't have any information about bank overdraft. So let's say, for example, overdraft. So overdraft as per cash book, right? Overdraft as per cash book, which is, let's say, $5,000. So remember this, make sure this is dollars. Oh, it's not rupees. Right? It's not rupees, it's dollars. All these are dollars, right? Okay, so this is the question. So so we're gonna prepare now bank reconciliation statement. So this is the transactions number we have, and this is the transactions, and this is positive or negative column. So this is the transaction number, and these are the transactions. This is positive impacts and negative impacts. And for example, here is a bank reconciliation statement of, this is the name of company, on, this is the date, right? So let's start with the first, balance as per passbook or balance as per cash book. As you can see that here we have a overdraft balance as per cash book. So I will write down here overdraft as per cash book. All right, overdraft as per cash book. Since it's an overdraft, so I will write down in the negative. All right, so it's dollars. So 5,000, right? Now, first transaction, which is here. The transaction is check received and recorded in cash book, but not sent to bank collection. The amount was 12,400. What do you think? Where I should write this one? So let me write down here. Check received but not collect. What do you think? Where I should write this one? Positive column or negative column?
Negative.
Negative. That's right. Because why negative? Because when check received, so I write down here, cash book and passbook. When I receive check, so from my cash point of view, my cash book point of view, I receive a cash, right? I receive a cash here. But actually nothing changes here, so imbalance. So in order to fix this one, how we fix it? By negative, right? So amount is 12,400. All right, so this is actually, it's a second transaction, but anyway I write down here 2, right? Because here transaction 1, right? Okay, now move on to this transaction, third transaction, let's say. So the transaction is payments received from a creditor directly by bank, but no entry was made in the cash book. So no entry made in cash book, right? No entry made in cash book. Amount is 27,300. What do you think? Where we should write down? In the plus column or negative column, minus column?
Plus column.
Plus column? Okay. So so that's all about your third transaction, which is payment received from a customer directly by bank, which is 27,300. Which is 27,300. And we will plus, because there is no any transaction, no entry made in the cash book, so we will make transaction in the cash book now. Now we move on to number 4. Number 4 is check issued for 175,200. $175,200. So write down here, check issued. So, but not presented for payments. So what do you think? What will be the impacts? Positive or negative?
It is a plus column.
Yes, positive impacts, because not presented for payments. Remember, issued means we are giving check. Giving check means, of course, we are paying money to whoever. So it's not presented for payments, so we will write down in the positive column, which is 175,200. Okay. Number 5, last transaction. Interest of 8,800 charged by the bank was not entered in the cash book. So what do you think? So let me write down here, interest charged. Interest charged. So what do you think? What will be the impact of this transaction? Positive or negative?
Negative.
Negative. Negative. 8,800. Right? For example, I make one change in this transaction to check whether you will be able to do that or not. For example, I change it. Interest of $8,800 charged by bank and was entered in cash book. So what will be the impact if I say was entered? If I delete it, no. What do you think?
It's also negative impact.
It's also negative. Anybody else? What is the impact? Anybody else? What will be the impact of transaction 5 if I says charged by bank and was entered in the cash book?
Positive impact.
Okay, so let me explain you how we will fix it. So cash book and passbook, right? It says that interest charged by bank. So means bank minus was entered in the cash book. So means we also record this one in cash book too, right? Balance is equal. How we will fix it? Do we need to fix it? No. So, no impact. No impact on BRS because this transaction is correct. All right. So keep in your mind these kinds of tricky sentences or tricky transactions are given. If all the transactions are given, it doesn't mean that all transaction will give either positive or negative impacts. Of course not. Some transaction may not give any impacts, like as here, right? How we will fix it? There's no any impacts on BRS. So we will not write down anything. Or you can write interest charge, and here you leave it blank. So both places you make it blank, right? So that's all about your bank reconciliation statement. So now we gonna find the now we're going to check the balance of these two sides. Um, so it's 5,000 plus 12,400 plus 8,800. So it's a 2, 6. This is the negative sides, right? And positive sides 175 200 plus 27 300, which is 202 500, and here 202 500. So we're gonna subtract 202 500 from this number, which is 17 6,300, right? So this is the balance as per pass book, right? So this is the balance as per passbook. So in our passbook, we have a negative balance bank statement, right? So that's is your answer. That is your answer. So that's the ideas of preparing your bank reconciliation statement. This is the math. This is without method, all right? Without method. Of course, this will be the same impacts over the cash book. So you start preparing. Let's say if you have a cash book, you start preparing cash book, writing 5,000 here, right? 12,400 here, 8,800 here, right? And here, 2,7,300, 1,7,5, 200, right? And now you will check a balance, and you can see that debit balance to debit side balance. So which means debit side balance means balance as per passbook. Passbook balance debit. So which means negative balance, right? So balance as per passbook, which is debit sides. It will be negative. All right. So that's the ideas of preparing with method. All right. So this is with adjustment and without adjustments. Right? So that's the ideas to prepare bank reconciliation statement. Right. So this statement is finished. So remember, this type of question you're gonna see in your assignments, right? So, but of course, your transaction gonna be much more longer. Depends 5 transaction, 10, 15, 20. Depends how many transaction you're gonna see in your bank reconciliation statement, right? So that's all about your learning outcome 3. So your learning outcome 3 is finished. So in next session, hopefully I'll give you assignments on Monday, right? So next session, we will, so if I give you assignments on Monday, so make sure you start doing your bank reconciliation statement, because I will ask you question in the next week. So next week, we will do your assignments calculations, all right? Everybody understand? Yes or no? Say something.
Yes.
Okay. So anybody has any question regarding this learning outcome 3, because we finished. But of course, next week we will do some calculations from your assignments. So anybody has any question? What time for the next session? Next session, we will have next session on I think same time, because next week I think we can do session on Friday afternoon. Are you free Friday 2:30?
No, teachers.
Are you free? No, you have a class. So if you have a
Yes.
class, then I'll see you on Saturday, same time, 2:30 to 4:30. Okay. So any question? Anybody has any question?
No, teacher.
No questions, so can we stop here?
Okay.
Yeah, so we stop here. I'll see you next week. I will send you assignments on Monday or Tuesday. You will see, and I will send you assignments through learning management system, so you can download from learning management system. All right. So we stop here. I'll see you next week. Thank you.
Thank you. Bye bye, teachers.
Bye bye.